How lucky am I, guys, that I've got the type of subscribers that ask phenomenal questions that in turn I can take and make a whole YouTube video responding to those questions, because the questions that I get asked are super specific and can help a whole lot of people. What is happening, guys? Ari here with Boston Automotive Consulting, and as always, this video is brought to you by saveonmyauto.com, where you can go on and get a head start in connecting with multiple dealers in your local area so that you can get the best price. And not only do I want you to get the best price, but I also want you to get the best type of credit approval, interest rates, and all that good stuff. So if you haven't already, please consider subscribing, because this channel is gonna give you everything you're gonna need to know so that you can land yourself the very best deal on brand new cars. So like I said before, guys, I got a question from one of my subscribers, Manny, which in turn turned into a whole list of questions from another one of my subscribers named Prickly Pear. And I want to take both these guys' questions and answer them to completion so that you understand exactly what you need to be doing when you're car shopping, and so that you can avoid having to run your credit and answer credit-related questions without needing to do any hard pulls on your credit. So most of the time, car shopping, as you might know, it's not gonna just take a couple days. And depending on how many dealerships you visit, you might be worrying, or you might be wondering, how is this gonna affect my credit score? Most of the time, when you're running your credit at car dealerships, regardless of how many different dealerships run your credit, it's counting as one hard pull by the credit bureaus. The credit bureaus sense that you're doing some form of car shopping, so they're pooling all these credit pulls into one hard pull. But that only gives you about a 2-week window. After that 2-week window, it's gonna start counting as additional pulls. So you really only got 2 weeks to do all these pulls, with it only counting as one hard credit pull on your profile. However, because what I like to do is tell people to span out their car search a month, 2 months even, in trying to get the best price, don't run your credit too early. It doesn't make any sense to. What they're trying to do is, when they run your credit, is to gauge whether or not, they can approve you for the best lease payment, as in the top tier for approval on that lease program, or offer you that promotional APR that they're offering you, because credit is broken down into multiple tiers. And usually the highest tier approval is tier 1. And you usually need between a 700 and a 720 credit score. But when you drop down into the high 6s, you're at tier 2. Mid 6s, you're at tier 3, and so on and so forth. So to understand exactly which tier you'd fall into, and to give an accurate answer to the dealership, I want to answer question number 1 from Prickly Pear. And he asked, where and how should you be running your credit? And the best way to do this, the best way to do it so that you're not actually running your credit, but you're getting the score needed for the dealership to be able to tell you, what the dealership uses is the FICO Auto Score 8 model. Instead of them running your credit and obtaining that FICO Auto Score 8 model, you can actually hand it directly to them. I've got a link in the description below where you can actually buy your FICO scores, your 3-bureau FICO scores, which give you your FICO Auto Score 8. You don't even need to have them run it. So you take your Auto FICO Score 8s with you, you print it out, and you take it with you to the dealerships, and you tell them, this is what my FICO Auto Score 8 is. And I want you to tell them, anytime they say, well, we can't quote you payments without running your credit, you say, that's fine. Go ahead and assume I've got perfect credit when you're quoting payments. If you know you don't have perfect credit and you know your FICO Auto Score 8 model, you've got to tell them to guesstimate, because ultimately you're not going to be running your credit until the very last minute. It's super important to not run your credit very early on in the car buying process. And if you think for whatever reason that you may not actually buy the car from that dealership, don't do it anyway, even if you're probably going to complete the transaction in less than 2 weeks. Just don't do it at that dealership, because who knows how many different places they'll be submitting your credit application to. Number 2, Prickly Pear asked, how can one improve their credit score? Now, when I answer this question, it's going to be a very short-term strategy. Usually, creditors update your credit profile within about 2 weeks to a month. Usually, My American Express will report changes, 2 weeks at a time. if you've got, let's say, an $8,000 balance on one of your credit cards, and paying it off, or at least cutting it down by half, is going to significantly make a difference on your credit score, maybe save that extra 20 points needed to get a better interest rate, then what you want to do is allow yourself 1 month, pay off as much as you can, or do what you need to do, rearrange some money, maybe ask for a credit line increase so that you can see an adjustment in your credit score. However, that will take about 1 month altogether. So make those changes, and then a month later, make that final credit pull at the dealership to understand what your FICO Auto Score 8 is going to tell you it's going to be, so that you don't miss out on a better interest rate at the time of signing. Number 3, he asked me, what's the best timing on getting a car loan? The best timing on getting a car loan typically has nothing to do with the car sales months. As in, you're not going to get a more competitive interest rate because of some holiday events or anything, any sort of thing like that. The Fed truly does control how good the interest rates are. So you want to closely monitor home interest rates to see exactly how that is translating into auto interest rates. And a good way to figure this out is by using websites like, I don't know, bankrate.com or Lending Club or Lending Tree to see exactly what changes have been happening in the auto financing world and how that could affect you. What I do want to suggest is, though, usually towards the end of the month, if you're going to be signing a deal, if you've already got some form of loan in place, what a dealership will do is give up their commission on the loan that they're trying to sell you. As in, if you've brought in an offer of your own from your own bank and they can quote unquote match it, they maybe actually even be able to beat it, and it gives them more of an incentive to do this more towards the end of the month if they know that they're gonna, save you an additional $1,000 in interest if they can just basically take out their commission from the loan. So if you're gonna be bringing in your own loan, keep in mind this may result in one pull from the bank or the credit union that you're trying to get your loan from, and then another pull from the dealership because they've also got to shop around your credit application to their lenders. However, keep in mind, the best way to go about getting a best interest rate is by actually visiting your bank or credit union. And if your bank or credit union doesn't really have a good rate, I also want to suggest a very up-and-coming, popular 2 companies. One of them, Supermoney, and the other one, myautoloan.com. Both of these places give actual offers back to you, like competitive. These are like the top dogs in auto financing. So I've got links to both of these places in the description below as well, where you can go on and shop around. But keep in mind, don't pull your credit at a bunch of different places. Choose one, use it as an example, and if necessary, use their best interest rate further down the line to get the dealership even to match or beat the interest rate. And if the interest rate here is really, really good, usually that, and I'm answering question number 4 here, usually that will be good for about 1 month after they've offered you that loan or interest rate. Question number 5 was, when should you be allowing the bank or the lender to run your credit? So it really is all going to boil down to how far in your car shopping you're getting to. So ultimately what you want to be doing is if it's going to be a purchase, you want to be drilling down the selling price of the car. The selling price of the car has nothing to do with the interest rates, right? So if they're saying, we can sell you this car for this and this price, and you're okay with the price, now comes time for the for the finance process. And when it comes time for that, you want to go back to step number 3, where I'm talking about reaching out to outside lenders or reaching out to your own banks to see what their best offers are before running your credit. So you want to zero in on who you're going to be getting the loan from. This is actually going to allow you that 2-week time span that I was referring to in question number 1, where you can pull your credit from a couple different places and have it count as one pull. As long as it's happening in a 2-week window, the best time to start running your credit is as soon as you actually nail down the price or the lease payment that you were going for. And now you've got 2 weeks to get this financing aspect taken care of. Question number 6 was, how many times are you allowed to run your credit without it within a certain amount of time without it hurting your credit score? So I don't want to scare you guys, but normally when you're running your credit at a car dealership, it's being run in a way not as just one pull, but several pulls. Because what they're doing is they're taking your whole credit profile, and if it's a loan, they're shooting it out to like 6, 7, 10 banks to see what interest rate they're shooting back to them. When you're doing it on a lease, they're just submitting it to one bank. It's basically the manufacturer's bank. Say, if you're trying to get a Honda, they're submitting it to Honda. So what I want to suggest is don't run your credit at the dealership if you're trying to get a loan. Run your credit at the dealership if you're trying to get a lease approval. Running your credit in the case of, trying to get your best loan, these guys at the dealership can pretty much tell you what all these different banks are offering at the best interest rate. So what you can do is, if you've got your myfico auto score 8, take it with you and tell them, listen guys, I don't want you guys to run my credit unless you know that you can probably get a range. Allow them a range of 0.5%. Tell them, I want you to submit my credit score to whoever you think is gonna give me back the lowest possible rate, and if not, that's fine. I'll be sourcing my interest rate from somewhere else. So make sure that they know that you're not gonna have your credits published to a bunch of different banks just to return back a rate that's not even acceptable. You wanna put the fist down and tell them, I've got this credit score given to me from my FICO Auto Score 8 model. And it's imperative that it's the FICO Auto Score 8 model, not the FICO 8 model. You tell them this is my score and this is what my intention is, so that they can very clearly follow your direction and use the bank that they think is gonna give you the best rate back. And if they can't figure that out, then try to source the loan from your own avenues and means, like I said before, your bank or credit union, or using a third-party service like supermoney or myautoloan.com. Question number 7 was, if you're starting your car search 6 weeks in advance, when should you acquire the loan? That's a phenomenal question. I would say if you landed a loan, say 3 weeks into your car search, because the loan company is doing a pull once and then doing a second pull right at the time that you gotta actually get the loan finalized, completed, and funded, they've gotta do 2 checks, basically once to offer you the loan and a verification check again to see if anything crazy happened in between these 2 times, so they can comfortably honor whatever they said that they would give you. The best time to actually get the loan, to have a check in your hand from the loan company so that you can hand it to the dealership, get the loan or the approval at least as soon as you start sensing that the price that you're looking for is gonna be attainable. If it's off by a few hundred, or if you're off by a couple $1,000s, that's fine. Get the approval anyway. And what you can do is you can use the leverage or the confidence that because you've got the loan in place, you can make these strong offers when you walk into the dealership, put the check down on the table and say, I'm ready to go. Here is my approval. Here is my final offer. When you have all this and you're confident about the loan or your credit score needing to be where it needs to be at tier 1 for the lease, it gives you that buying power instead of you saying, yeah, I think I can do that price as long as I can get approved for this and this loan. When you start doing this, the confidence in the deal starts withering, and even the dealer can sense that and really doesn't have much incentive to go back to his boss and say, this guy's sort of ready. That's what happens. Instead of that, they're saying, this guy's ready, he's got an approval, he's got the check, we're ready to go. So have it with you as soon as you start sensing that this deal is gonna be possible soon. So number 8, the question was credit union or outside bank loans versus dealership loans. What's the pros and cons? Guys, private bank or credit union loans and dealership loans, they're the exact same. The dealership works in conjunction with these private banks or credit unions to offer their own products, but at a marked up rate. When you're reaching out to these private banks or credit unions, most of the time, you're getting a rate that's very, very low or lower than the dealership. And what the dealership is doing is it's taking this rate, bumping up the interest rate on it and selling it right back to you. What you don't know is that these are all the same loans, and if you're good enough, you can negotiate down that private rate that the dealership is offering you to a lower rate than what the credit union or private bank is offering you. This is because both the private bank or credit union also has some commission built into their offer, but when it gives that offer to the dealership, it gives them even more wiggle room for commission. You can actually have the dealership, if you fight hard enough, sell you that interest rate at a lower rate than what the bank or credit union is giving it to you for. So for instance, if DCU is offering its members, say, a 2.74 interest rate from the bank or from the credit union directly, and the dealership is offering it to you for, say, 2.99, there's a chance that the dealership could give up 0.25% markup, sell it to you for 2.5. So there are no differences between these two scenarios, but you got to keep in mind the dealership has a long list of legitimate lenders and a few really just untrustworthy ones. Definitely go with a bank that the dealership is offering that doesn't sound shady, like a mysterious business with no address or phone numbers. So guys, I hope that this video helped you understand exactly how to run your credit, where to run your credit, how to get your credit score on your own, and how to use it so that you're not being played around with at the dealership. Definitely check out your myfico auto score 8 by clicking the link in the description. Purchase your reports, bring it with you to the dealership, and don't be told this is your interest rate, or don't get asked, let's run your credit. You already have the information available and you can take it with you dealer to dealer. If you found this information useful and you want to see more of these new car buying and negotiation tip type videos, please consider subscribing. And don't forget to visit saveonmyauto.com down in the link in the description below while you're shopping for new car pricing. Thank you so much for watching, guys. We'll see you next time.